Hello, everyone. We'll be starting shortly in 5 minutes. Hi, good evening, everyone. So, first of all, thank you all for taking out your time to attend this webinar on how to invest in bonds online with IIFL Securities. So, first of all, let's understand what bonds actually are. So, the definition that you see here on your screen on the slide is a very classic textbook definition. Let me explain you bonds through a very simple way. So what happens in bonds exactly is that there is an issuer of bonds, and obviously there are investors for that bond. So typically what happens is, let's take an example that issuer wants to raise 100 rupees, and for that 100 rupees, he's willing to pay 10 rupees as coupon. So coupon is nothing but the interest on the bond, and the term of the bond is 5 years. So the investor will invest in the bonds and he will give 100 rupees to the issuer of bonds, and in return for that, the issuer will pay him 10 rupees. So 10 is actually 10% is the coupon. So 10% on 100 is 10. So and this is for 5 years. So for every 5 years, the investor will get 10 rupees as the coupon or interest in simple terms on that particular bond. So in year 1, he will get 10 rupees. Year 2, he'll get 10 rupees. Year 3, 10. Fourth year, 10 rupees again. But in the 5th year, he'll get 10 rupees plus he'll get his original principal of 100 rupees. So this is typically how a bond works. There is another term which is debentures. So debentures are nothing but bonds, but the only difference is that debentures are used for instruments which are debentures. The word is used for the bonds which are issued by private corporate sector. And the term bond is usually used when central government or state government or public organizations issue bonds. So this was a brief on what are bonds. Next question is why bonds? So people will argue that why should I invest in bonds? Why should not equities? So the main reason is that bonds help to diversify the investment portfolio. So typically, an investor has a lot of equity or say other products like real estate or commodities or fixed deposits. So bonds is another way of diversifying your investment portfolio. As it is said that you don't have to keep all your eggs in one basket. So bonds is the way to diversify your portfolio. Bonds offer you assured returns, and they are relatively inelastic to market fluctuations. So yeah, in equity, you must be aware that the prices change every day, but in bonds, they will give you assured returns like 10 years, 10 rupees on 100 rupees of principal, 10% coupon is fixed. So that 10 rupees would be an assured return for you, and it can be and the 10 rupees can be paid by the issuer yearly, semi-annually, quarterly, or monthly, depending on the terms of the bond. Yeah, this explains the next point as well, that it is a provide higher rate of return as compared to fixed deposits and recurring deposits. I think typically a fixed deposit would offer somewhere around 4.5 to 5% as of now. But there are bonds which give you coupon of like coupon payment of like 13%, 12%, 10%. So that is a significant, it's a significant higher as compared to recurring deposits. Bonds are often liquid sources of investment. So what happens is, if you purchase a bond today, you can either hold it in maturity, or else if you are in need of liquidity, you can always sell your bonds in the secondary market. So liquidity is not an issue in bonds. Bondholders also enjoy a measure of legal protection in case of default. So typically defaults don't occur. 99.9% they don't occur. But in case if the issuer defaults, or if the company is winding up, the first preference of payment would be given to bondholders and not equity holders. There are also a different variety of bonds to fit different needs of investors. So there are, bonds which pay coupon annually, semi-annually, quarterly. So you can choose between which bonds you want to buy, or there are bonds who offer tax advantages also. So depending on the customer's preference, the customer has a lot of choices of, investing into different bonds. So this is the main topic of discussion here in this webinar, is how to invest. I mean, what is the procedure of investing bonds online using IIFL Securities account? So this is very important. So let me show you how do we exactly do it. So this is the landing page of IIFL Securities. What you can do is, you can go to personal finance, and in personal finance, there is a tab called secondary bonds. You will just have to click on secondary bonds. Here you will see this page, right? So there's an option of discover bonds here and here as well. You can click on anywhere, it doesn't matter. So once you click here, you'll have to log in. Yeah, you'll have to log in through your IIFL Securities account. And please note that to buy bonds online using IIFL Securities, it is mandatory that you need to have IIFL Securities demat account. So I'll just log in and show you how the process is to be done. Just enter your credentials. Yeah. So once I log in, I can click here bonds. I can click on bonds. You will get this page, right? So once I am on this page, I have a whole lot of bonds which are listed over here. So this is one South Indian Bank, India Bulls, so on and so forth. And one more thing, there are a lot of filters over here. So you can apply the filters and accordingly you will get the results, right? So let's try a filter. Let's click on FDs which earn higher fixed income than bonds which earn higher fixed income than FDs, right? This is the one. This is very important. This credit rating is very important. Safety wise, AAA is of the highest safety. And A and below, they give you high coupon, but they are relatively less safe. I won't say that they are not safe, but they are relatively less safer than the AAA. So for the timing, let's just select AAA bonds, right? And put yield to 8%. So having applied these filters, I am getting these bonds. These bonds are listed, right? Right from Fullerton India, we have India Grid, Mahindra and Mahindra, right? So for example, let's select this bond. You just have to click on this. So once I click on this bond, I can see each and every detail of this bond. So the minimum investment I can see. So you require this minimum investment to invest into bonds of Fullerton India. You can see the yield, you can see the maturity, you can see the payment term. This is a yearly payment term. You can see the cash flow as well. When you're the dates on which you will get the interests, you can see the entire cash flow. See, you have to click here. You can see the entire cash flow, right? You can see the credit rating, debt quality. You can see the highlights. You can compare with FDs and everything, right? You can read more about the issuer, what is the background of the company, and everything is there in this screen. So once I've decided to invest, I just have to click on invest. There is this disclaimer which you need to accept, continue, right? Here I have the option of increasing my investment as well. So I want to invest. So 1 unit is worth 11,61,802 rupees. I can increase this to 3 units, 4 units, 5 units. So let's say 5 units. So this is my investment, 58 lakhs 9,013 rupees. So I just have to place order. Currently, we are not in market hours. So this, I'll show you the screen, what appears after the market hours. So once you click on that screen, you'll get a deal confirmation. This is the sample deal confirmation. This contains each and every detail of your bond, like what is the coupon rate, what is the interest payment date, redemption date, face value, your YTM, your price, right? Each and every detail is there. You just have to accept, click here and accept this deal confirmation and click on purchase. Once you click on purchase, you'll get an OTP on your registered email ID and mobile number. You just have to put in the OTP. And once you put your OTP, the next page would be the net banking page. So the bank which is registered with your IIFL Securities, from there, it will land on the net banking page. And once you are there on the net banking page, you just have to do the transaction of net banking, right? Whatever is the amount. So in our case, it was 50 odd lakhs. So once the payment is completed, the deal comes to us, and we from here, we make sure that the bond is delivered to the client's account the next day. So it is T+1 settlement. So once you do the payment, your job is done. And that is how simple it is to, actually invest in bonds online, sitting at home. It is a very hassle-free process. It's very convenient, right? And there are a lot of bond options that you can, select accordingly. One important thing to note here is the rating. Please look at the rating of the bonds and see, this is the rating. Make sure that, you don't go beyond A, like CRISIL A. So no doubt that if you go down, you will get good coupon, but that comes with high risk. So typically CRISIL AAA and AA, A and A should be the, the zone where you select your bond from. So yeah, this is from my side, this process. I've explained you the process and it is very convenient. So this is from our side. Yeah. So if anyone has any questions, please feel free to ask your questions and we'll answer your questions. Any questions regarding, any doubts or any questions of how to invest? So I think we have one question out here. Now I'd like to invite Rahul, my colleague, to answer all your questions.
So Ravi Shankar has asked this question: to what extent the rating of bonds are reliable for investment? So as Ankit just said, कि AAA, AA, and A rated bonds are very safe to invest. When we shift towards B, BB, C, or D type of bonds, rated bonds, it is also possible that you will be getting regular income from them monthly wise. But as soon as you shift from B to C to D, the risk of defaulting also increases. So we have tried to keep the best bonds in our platform. You will get the best rated platform bonds whose liquidity is also very high. There will be no issue when you will try to sell the bonds from this platform only. Our system will find the best buyers for your bonds, and we will provide you with that. While selling, the all the customers will be having an option to choose within the best bid prices that our system has asked from the all the issuers from the market, and our customers can get the maximum benefit from this. All The second question is from Suhas. Ki all bonds come with high ticket size. What about primary market? How to invest? So Suhas, this is a very good question. As of now, from our platform, we are only allowing secondary bond market, bonds in the secondary market, but we'll be live soon with the primary market bond also. It will take us around 1 to 1.5 months to make that live. So after that, we develop it, we will communicate it to all of our clients, and then you can start investing in the primary bonds. So there's another question that what is the brokerage? So Suhas, that brokerage is not really fixed. Uh, it depends on the quantum that you are trying to invest. So for different quantums, we have different uh, slabs of the brokerage. So but the average brokerage lies about 0.4 to 0.5% of the investment amount that the customer is trying to buy. Any more questions by anyone? So I think there are no more questions. Can we see live prices in market are? So Suhas, so our system updates the bond price on an hourly basis. So it gets updated once in an hour. But so as we are still in a process of development, and we will try to make the market, the bond price gets updated on real time basis as per the market.
So Suhas, typically what happens is that we try to get you the best price for your bond purchase because we have a tie-up with a lot of bond houses. So be rest assured on the prices, you are going to get a very reasonable price for your investment. So there is, yeah, and as Rahul said, it keeps getting updated every hour or so. So that is about the price that you're asking. And also we are in the process of adding few more bonds which are in demand in market. So that would be done in the next couple of weeks. So you guys will have much more choices for your bond investments. Any more questions, please? Okay, so there is this question from Sonali, and she is asking how will we get the interest of the purchase bond? So yeah, sorry, it will be directly credited to your registered bank details. So yeah, that would be directly remitted by the issuer of the bond, depending on the uh, frequency of coupon payments, the interest payment. So if it's an annual bond, there is a fixed schedule. Everything would be mentioned in the deal confirmation. You can just have a look at your deal confirmation, and as per the schedule of the bond payments, the interest payments, the bank account of the investor would be credited accordingly.
So we don't see any more questions by any of the attendees of this webinar. So there's another question by Salish. How do I know the yield? So Salish, whenever you will go to any of the bonds, when you click on discover bonds, and suppose you want to see the interest of the South Indian Bank Limited bond, when you scroll down in the second field, you will get to know about the exact yield this bond is going to give you. You can also click on I to get the definition of what is coupon and what is yield. So on this main bond detail page, you will get to know each and every details of this bond. What is the ISIN number? What was the face value? What was the mode of issue? Is it listed or not? What is the minimum investment amount? The payment term, in which frequency you will get, your bank will get credited with the coupons. So all of these detail will you will get to know about from this page. Also, you can see the exact cash flow on date by date. Suppose you are investing 2,06,000 rupees on 11th of April to 2022. Your next three coupon rate will be credited to you on 24 Jan to 2023, 24 Jan and 24 Jan. On the last mature on the maturity date, you will get your interest plus the principal amount of 2 lakh rupees. And if you increase the amount from here, you can see the exact interest that is okay. So let's wait for another 2 to 3 minutes, and if we are not going to get any questions, we would like to end this webinar.
So yeah, thank you everyone for joining us. On this note, we'd like to end the webinar. Thank you all. Thanks.
Thank you.